What is going on, everybody? It is January 31st, 2024. Day log episode over NQ and live stream review FOMC, sort of. If you guys were there in attendance today, you saw me just basically tape reading and predicting what ES was doing actually today over NQ. And I'll show the reasons why that was. Short and simply, ES just had cleaner sell side liquidity pools, a cleaner drawn liquidity to look for. So if you ever have an instance like that, then I would recommend looking at a different asset class. Obviously, ES or it's going to be ES or NQ because I don't trade YM and I wouldn't recommend it either. So looking at NQ today and FOMC and everything in its entirety, we closed off lower on the daily time frame. We're still inside of this weekly inefficiency here. So keep an eye on that as we roll into tomorrow and Friday, because we still have NFP ahead of us. This entire week to me is very low probability. Sure, can you get off trades? Can you end up in a profitable position at the end of the week? Sure. But to me, the risk is too high. Where the market's sitting at currently, the dollar index and the other indexes, it just doesn't seem high probability. It doesn't seem worth the risk to participate inside of these conditions. There's a reason why I was really not pushing to live trade at all during FOMC. I'm going to be live streaming tomorrow, but I don't recommend trading in it. I'm not going to be trading in it. And NFP in and of itself can be manipulated as well. I can trade after it if something is very clear to me, but for the most part, I'm leaning on the idea that I'm done for the week, and I'm happy and I'm content with that. This month was a success. It was profitable. So I don't need to push something just because it's at the end of the month and we have these rules and things set in place so we don't hurt ourselves, right? ICT has advised us as our mentor to not trade these type of weeks and to steer clear away from them. So you have to listen to that advice and not do your own thing. Just because other people on social media are doing it, just because other people are taking trades and they might be profitable in it, that doesn't mean that they're always going to be profitable. They're always going to be taking those trades, nor does that mean it should affect you. Looking to the person to the right of you, to the left of you, does not influence your trading account. So focus on your own paper, focus on yourself, right? And that's what I'm trying to advise all of you and lead you in the right direction, because I think a lot of you can get these type of conditions very, very wrong and hurt yourself. So even myself, looking at the daily time frame, look at the volume imbalance that we've created on the daily time frame. So that's interesting to see. I'm curious, let me just double check myself if the actual contract has that on the daily chart. So if it doesn't, that's pretty interesting. Okay, so it does. That's good. Just looking at price, to me, I can make a decision both ways. I can make the case for us really expanding higher away from here. We're still inside of that weekly point of interest, the daily. To be honest, I really can't even make the argument to go lower currently. And the only thing we've ever done is take out buy side liquidity on that higher time frame to the left of us, which I don't have marked up. It's just, to me, it's not willing to displace higher currently. So it's the reason why I'm not super heavily bullish on it currently. The 4-hour time frame, we drop down in this inefficiency here. Traded up into the volume imbalance, the new day opening gap on FOMC. So we traded up into that a little bit higher, and then we dropped off lower. Looking at the 1-hour time frame, refine all of that. So inside of the weekly, we actually dropped beneath it today. Interesting. But inside of the weekly daily 4-hour inefficiency there, discount. But market structure, to me, it would have to really make some hard evidence for me to want to push for higher prices. We do have some relative equal highs in here, but to me, that's not going to happen by the end of the week. At least I don't predict that. I'm not anticipating that. Let me see here if we drop down into, yeah. So this is not a breaker, but this is a mitigation block, because this high would have had to run this high here. So it would have been a high, a low, a higher high than a lower low. So we didn't do that. We just collapsed underneath it. So mitigation blocks, the pattern is different than a breaker block. You need to understand that. Let's look at the lower time frames in here and what happened. Overall in the AM session, I wasn't a huge fan of it. I don't trade the morning session, AM session of FOMC. Typically that morning session could be highly manipulated. Even the day before you saw yesterday was not as clean. We had a decent sell-off in here today, but again, it's part of rules to just follow them. I slept in. I was happy I didn't participate in today. I didn't feel any type of fear of missing out on any of this. But overnight and coming into the morning session, we traded up into, this is the new day opening gap. So we opened lower yesterday, traded up into it, and we can still utilize it throughout the entire day. Traded up into the CE of it. Look at the bodies respecting it. Dropped off lower in here. This is the open. Look at the discount level of it, where the bodies are respecting it. Beautiful. Dropped off lower in here. Came back up. If you go into a 1 minute time frame, take this away. I think I have another box on here. There we go. So you can see in the morning session, this is the open here. Displays higher, drop off lower, shift to market structure there. These two down close candles, if you take out the bodies and extend them, that would be your bearish breaker. We end up leaving this as a breakaway gap. And if you're ever wanting to know when to anticipate breakaway gaps, breakers are a good indication of it. If you have a breaker that's residing underneath a fair value gap, you can anticipate that fair value gap to stay open and the breaker to hold price off lower. So we just placed in here, bearish order block, drop off lower, and then we attack sell side here. So overall, again, I'm not upset. I'm not mad. I'm very happy that I followed my rules, my discipline to stay out of price. To me, I don't even know if I would have taken a trade in the AM session. Of course, in hindsight, it's hard to say. But throughout the FOMC release, I was annotating price, particularly ES, which I will go over to. And all the targets were outlined and delivered. There's just nothing for me to really engage with price. And also I had a little bit of technical issues right at the point where price started to drop off lower. My entire computer shut down and I had to reboot the stream. So that was interesting. These are the current new week opening gap, old new week opening gap there. We traded down into that beautifully. And I was annotating throughout the stream when we were up here how price should likely lead into the sell side liquidity objectives, because they're fairly easy, right? It's an easy meets the eye ICT classic relative equal lows. It's standing out like a sore thumb. So any smooth edges are going to be made jagged. And if you can see something like this, if it's not an NQ, how NQ wasn't as clear with the sell side objectives. If I see this on ES, I'm going to elect to trade ES because I can see the objectives clearly. It's easy draw liquidity, right? It's one-sided. And as soon as we started to drop off lower in here, if there was an entry pattern, I would have entered on this, but there just simply wasn't. And sometimes, like I was mentioning in the live stream, the bus leaves without you, and you can't be upset or mad about that. You can't be wanting to change your model or change the way you approach the market, because there's going to be times when the market just leaves you and there's no re-entry into the market. So you have to understand that with your model, there's going to be times where you simply cannot enter in the market. And that's part of discipline, where if you break that, you just enter into the market. Like if I was just to sell short in here at any given spot, just because I saw the draw on liquidity without my entry pattern, that's me breaking my rules. Because on the flip side of the coin, when the market is doing that, it may retrace on me. I'm going to think I'm smart. I'm going to enter in, be like, yeah, I got it right last time. I enter in without my entry pattern, and then price reverse and stops me out. So there's always two sides of the coin. And to me, just sticking with one side and saying, you know what, I'm just going to elect not to trade it. And here was a entry pattern, but at that point in time, I was still fairly uncertain if we were going to displace higher away from this discount fair value gap. So we did take out buy side liquidity. There's a lot of back and forth prior to FOMC as well. Took out sell side, buy side, dropped down lower. So I don't know if we were going to displace higher out of here. Typically, I want to see this broken, and I was annotating how this would have became an inversion. And if we dipped up into this SIBI here and the inversion, I would have most definitely shorted in that. It was very clear to me, but I didn't get it. So I have to elect to do nothing and sit on the sidelines. Price dropped off lower in here, ended up respecting this fair value gap there. And then we sold off into the sell side there. And then the old new week opening gap lended support, kind of pushed price higher today. So if you're there for the live stream, I thought it was an interesting study. I talked about the first 30 minutes, how we don't trade that in FOMC, and how the second half typically lends to a lot of volatility, which you guys observed and saw in real time, how the second half we got a lot of volatility throughout even the next hour as well. So it's a pretty common characteristic of FOMC. It basically every single time that happens. So hopefully that was a good learning session. I think that's going to be it for today. I mean, the only other thing I can talk about is dollar index. We're still inside of consolidation. Like this is going on for almost 2 weeks now. If you're trading any asset class that's directly correlated, like EU, GU, foreign exchange pairs, I mean, this has to be brutal. It has to be. I mean, even for us that are trading index futures, I'd prefer if dollar index was moving in a one-sided directional, price. But if dollar index is ever like this, where it's inside of consolidation, I'm disregarding it, really. I'm not going to be looking at the micro movements inside of here and basing my analysis on NQ or ES. To me, NQ and ES, as you've seen, are able to move freely while dollar index is inside of consolidation. That is a profile that ICT has outlined for us. So I'm aware of that. And if that happens, like we're having right now, and even in here, I'm in an understanding that, well, I don't really utilize it. Until we start moving and having clear one-sided directional price action, like we start moving to the highs or to the lows, and I could see NQ and ES and why I'm all moving and correlated and in sync with it, then that's when I'm going to utilize it for my advantage, right? But if it's inside a consolidation, then it means nothing to me, right, until we start moving out of it. So only thing I'm going to say on dollar is we continuously keep taking out sell side in here, as I have annotated. So anytime you're inside of a consolidation and you're taking out one side and leaving the other side fairly intact, like these relative equal highs there, the buy side residing in here. See how we've only taken out buy side once, but we've taken out sell side 1, 2, 3 times in here, basically. So to me, it's leaving the buy side while taking sell side. So I'd like to believe dollar index is going to want to continue higher. And that's going to be a determining factor with NQ and ES and the other index feature in terms of analyzing. So again, I'm not going to be trading tomorrow in terms of live, but I will be on the live stream annotating price and then NFP. So that's going to be it for today's video. Hope you guys enjoyed. Until tomorrow, good luck and good trading, everybody. Be safe.